GM everyone, and welcome to Smart Contact, an interview series with the world's most important, influential, and impactful Web3 leaders. This podcast is produced by Web3 Harbour and is supported by Circle, our 2024 Smart Contact lead sponsor. Like and subscribe for more Smart Contacts. Okay, so let me list off a few people who've sat in that chair for Smart Contact in the past. Yatsu, chairman, founder of Animoca. Sergey Nazarov, who is the co-founder of Chainlink. Alexander Larson, the co-founder and chief operating officer of Sky Mavis, Axie Infinity. Sandeep Naval, co-founder of Polygon. I can keep going and going and going. The reason I bring this all up is that with all of these guests that have sat there before, my wife has never been interested in coming, and this is the only one that she asked if she could come to. So no pressure. Now, to be fair, she's not here, so she thought about it.
She's going to watch it afterwards.
She thought about it. She decided, still not worth it. Michael, welcome to the pod, as the kids say these days, I guess. Bullish, CLSA, JP Morgan, and prior to all of that, Canada. And now you've lived in Hong Kong for
16 years.
16 years.
Yeah.
You've been in Hong Kong with your lovely wife and 3 kids. I'm going to jump right into it. The title of today's session is, How Many Crypto Exchanges is Too Many? Do we really need another one? There are literally hundreds of crypto exchanges at this point, with the 4 horsemen at the very top of the stack: Binance, Bybit, OKX, Coinbase. Then you have, I guess, tier 1B, and they'll be very upset to hear me call them that, but BitGet, KuCoin, Kraken, Crypto.com, Gate. Listen, these top 10 exchanges, they hold about 90+% of the market share, if we're talking about trading volume. And Binance by itself is half of the market. So why build another crypto exchange? There's already hundreds. And there's the top 10 that take up the entire market, with one giant losing market share, but it's still a giant. So why build another one?
Yeah, no, that's a fantastic question. I think the best way to kind of approach it is kind of tell you a little bit of the story of why we started this at the very beginning. Because when we were building the prototype back in early 2020, we were already asking the question, what's going to happen when we get into the market? There's already 400 or something there. Why bother? And I remember this one time I produced this chart, and it was basically showing the composition of institutional versus retail volume at exchanges over a period of time. So the very first one was, the New York Stock Exchange, London Stock Exchange, 100-something years old. How much of it was institutional? Probably about 80% or so. And then we went to the next one, which was the Chinese stock exchanges, 60 years old or so, probably roughly about 60% institutional, the rest of it was retail. And back when I was working in equities, that was referred to as a fairly retail market. And then at that time, I was like, okay, what's the composition of the market for crypto? And back then we didn't have a lot of great, kind of sources, but the best guess was that it was about 99% retail and maybe 1% of people in the background who were doing it in a professional capacity. But when you looked at the overall scale, right, I think it was something like, the market cap for the equities world was something like, 120, $trillion. And then it was like, sorry, not trillion. It was just 120x times more than the overall market cap of crypto at the time. And so I said, hey, if we're gonna, if history has any rhyme or reason to it, it's a good chance that as this space grows, there's going to be a lot of good first principle reasons for it to continue moving in the direction of what we've seen other markets like, the equity exchanges have done as well. And when we went through that, we said, well, actually, what do those people look like? What does that need look like? And it looked like something where you needed to solve two particular problems. And that's kind of largely what we decided to build Bullish on, which was there's going to be a certain element of trust. And the language of trust we felt at that time was going to take fairly traditional forms. And it's going to look like, for example, having an audit. It's going to look like having a regulator. It's like all this stuff that at the time was not in the spotlight and was not particularly that interesting or attractive in the crypto world. And the second one was about scale. A lot of my former clients were these big sovereign wealth funds, and they were saying to me like, hey, crypto sounds interesting. It sounds really cool. But if we put even a drop of our assets into there, we're going to be the biggest player all of a sudden. And so this idea of, scale, liquidity, all this stuff, it became very clear that out of the hundreds and hundreds of exchanges out there, none of them really were on a path of addressing that, bar maybe one or two. And so that's where, for example, when we were getting to the market, maybe actually we're not competing against hundreds. Maybe we're actually really competing against a very, very small handful of these people. Because at the end of the day, like there's a strong belief, I think, that, we use the term use cases, I guess, to a certain degree in technology, but there's an even better, I think, framework that I've kind of heard over the years, which is job to be done. If there's a job that's really like where you can actually provide the best alternative for, it becomes less about correlation defining a product market fit. It becomes causation. It becomes, this is actually the best thing for that. So
you clearly have an MBA.
I don't. I have a poor man's version of an MBA. Read a lot of books. But basically, the idea was, hey, actually, let's not think of competing against 400. Let's think about competing against a very small number. And to us, that was the reason why. Now, you kind of, fast forward into the future to where we are today. And the answer to that question, after having been asked many, many times and grilled many times by our customers and prospective customers, is you don't actually need that many. You really don't. Like, I don't really know why there are hundreds of exchanges still. And to be honest, when you looked at the crypto winter, back in, when FTX exploded and everything kind of after that, the number of exchanges drastically shrunk. And it was one of those things where it's like, that felt like the right type of consolidation, that felt like it was inevitable. And then as
which by the way, you're talking like if it's ancient history. That was a year and a half ago.
Yeah, no, it's true. I know, right? It's kind of crazy how
the cycles in this industry are just super fast. But yes, there was consolidation.
Yeah, right.
Contraction.
But even now, as markets are coming back, you're starting to see new exchanges show up again all of a sudden. And so, the question hasn't been answered, at least definitively, except in my mind, because I'm like, I don't know why people are exploring this unless there is something specific that they're really, really trying to get after, and it's got a large enough, call it market size to actually make this, a profitable venture, right? So
yeah, and we'll get to what innovation and disruption could look like in the exchange world in just a minute. But 4 years on from when you were early prototyping Bullish, where at that point, by your best estimation, only 1% of the market was institutional, what does that split now between retail and institutional look like in crypto trading?
I'd say right now it is probably best guess, and this is purely just like a little bit of finger in the air type of thing, probably about 20 to 30% of people that are, and I wouldn't say, when I say the word institution, what I'm referring to are people that are non-individuals. They're doing this as a corporate enterprise. This is what they're doing as an actual business.
And do they wear Patagonia vests while they're trading crypto?
They might, yeah. Some of them do. Some of them wear T-shirts with their logos on it too. Yeah.
I'll cover my logo.
So I was very tempted to wear mine today too, but I just felt like,
hey, the Bullish logo is a very, very good-looking logo. So kudos to your design team for that. And then for Bullish itself, right? You've introduced yourself now as an institutional grade crypto exchange with those signals of trust that 4 years ago were quite rare, but those signals of trust are no longer rare, and certainly not in the sort of the top 10 of crypto exchanges. And on top of that, here in Hong Kong, you guys have applied for the retail license. So tell me more. Like, what is Bullish today? You told us what Bullish started off as. What is it today?
Yeah. So just one clarification is we haven't applied for a retail license. We've applied for the virtual asset license here as an operator.
Got
right?
it.
So
Thank you for the clarification.
Yeah, where we are able to operate, we'll be hopefully be announcing very soon when we have some more clarification. But with that being said, what's different? I still don't think it's actually that common. Like, I'll tell you an example. When FTX exploded, all of our clients said to us, hey, we like you guys. You guys seem like you're reasonable, but we're going to pull all our assets off of your exchange, and we're going to pass you a 25-page questionnaire that you need to fill out before we decide to do anything with you again. And, when I went through it, it was pretty, kind of detailed. The one, for example, that kept coming up that I thought was quite flavor of the month at the time was things like proof of reserve. Everyone was like, show us a proof of reserve. And we said, hey, you know what? We don't have a proof of reserve. But how would you like a fully audited, kind of financial statement from Deloitte? And they're like, wait, hold on a second. We can ask for that? I'm like, yeah, we can. I mean, like, wouldn't you ask that of any other company that you're working with that, you're putting millions and millions of dollars with? And the truth is, it was rare, right? Not to say that we're the only ones, but it was not an often kind of quoted response that they received from other exchanges. And so even things like that today, like, it's one of those things where we feel like it's the traditional format of credibility that people find palatable. And because of that, it helps in that kind of understanding. Look, other things like getting licenses in places that people understand, like with the SFC here in Hong Kong, it helps people to understand that there's a level of accountability and that there's that kind of external validation and verifiability. So that
what
helps.
other points of differentiation? What else does Bullish either have or is planning on launching that really sets it apart as an institutional grade trading platform?
So let's go back to this idea of like scale, right? That was one of the big things that we kind of kept hearing from other people as to how we actually think about entering the market. So when we built it, counterparty trust was one pillar. The second pillar was this idea of, hey, how do we differentiate how we provide liquidity in the market? Right? You asked earlier, like, this idea of what's deep liquidity. Back in 2020, maybe actually more like late 2019, the most interesting thing happening in kind of the DeFi crypto innovation space was AMMs. It was like the hot thing. Back then, Uniswap wasn't the popular name. It was Bancor, if you remember that time. And we kind of started looking at it and felt, yeah, there's something here that's quite interesting. We didn't really know where to take it necessarily, but we said, hey, let's look at this particular piece of technology and innovation and find a use case for it in a CeFi setting, because we're building this great counterparty. We're like, we don't know how else to solve this idea of KYCing everybody yet. We don't know how to solve the idea of regulating DeFi yet. So we said, hey, look, we're building this great counterparty. Can we move this idea of AMMs into that space? And so we said, yes, okay, cool, let's do that. And when you think about an AMM in its very first principles, it's simply just an instruction that says between a min and a max price, provide liquidity while maintaining a spread in the middle. And as people interact with it, it just gets updated. That is effectively just an algorithm that says bids and offers on both sides of mid according to the trading. And so we said, hey, well, actually, you can marry that with what we refer to as central limit order book. It's where everyone meets together to either make markets or take markets. And so we built this technology together and said, hey, here's how, for example, we can create a unique experience of bringing together two sides of one coin. So with that being said, we built that technology. We then went to our regulator and said, hey, by the way, we also have a sizable, kind of balance sheet. Would you be comfortable if we actually took some of our balance sheet and put it in this AMM to bootstrap these markets, because we felt this AMM technology, these instructions, were the most conflict-free way of being able to provide liquidity to our customers and in a transparent manner. And they said, yes, you can do that with our blessing. Make sure you're running fair and orderly markets. Make sure it's transparent to your customers. We're like, absolutely.
And you guys were the first to do that?
Yes, we were the first to do that. And when we went to market, what we found was that, people that were trading in significant size all of a sudden found in us effectively what is, a unique source of liquidity that's independently priced. And just, it became this kind of interesting thing where if you were a serious trader in the market, all of a sudden there's a serious player that shows up that's complementing what you're trying to do. And to us, that felt like a really interesting value proposition. And that's part of the reason why over the last 2 years, we've been seeing just increasing amounts of volume. So that you, for example, you said, hey, here's your top 4 large exchanges, and you've got this kind of next tier. We oftentimes look at this one particular report by Coinmetrics. They do like a weekly state of the market type of thing. For the last, call it about 8 months or so, we've been consistently top 5 in the Bitcoin and the spot and the Ethereum spot exchange volume rankings. Mm-hmm. And I think it's interesting because we don't really do retail. It's actually just people who are doing this professionally seeing us solving a problem. And so that's kind of where, we've taken that.
Sorry to interrupt the video, but I want to tell you about our 2024 Smart Contact lead sponsor, Circle.
What is Circle?
At Circle, we're building a digital dollar that brings the power of the internet to money.
Circle's the place where crypto meets stability,
where local businesses meet global customers,
and the US dollar meets USDC.
Meet Circle.
Thank you to all of our sponsors and community partners. Now back to the conversation. Let's go behind some of these closed doors then in your discussions with the institutionals, because I think that there probably are a lot of people either in this room or listening and watching this podcast that are still skeptical about where this institutional money is eventually going to come from and whether or not we can ever, and maybe some will question whether or not we should ever get to a crypto marketplace where 70%, 80% of transactional volume is institutional. I think the skepticism right now is whether or not that's even possible. Is there actually appetite for this? Now, we've seen recently that institutions are getting more, at least vocal about this stuff. I mean, the Bitcoin ETFs in the United States launched in January. Within the first month, there was a net inflow of like $1.5 billion and trading volumes of $2 billion on a daily basis. Like it was significant. It wasn't huge, but it was material. Hong Kong's ETFs, the Bitcoin and Ether ETFs, not as wild of a start yet, but growing. And we've seen the likes of BlackRock go all in on RWAs, and this ridiculous number that BlackRock came out with that everyone now is latched onto, which is we are going to tokenize $10 trillion of our assets as RWAs over the course of X number of years by 2030. So institutions are making a lot of noise. Family offices, private wealth managers are talking more about exposure in crypto, but the quantum of dollars is still not there. So behind those closed doors, what is the actual conversation? How real? I mean, I know you're going to say it's real. You are the head of sales for Bullish, but tell us about the conversations that could convince us that the institutional interest is real.
Yeah. One of the things that I kind of was convinced early on when I joined Bullish was I do believe that this marketplace will form kind of on its own first principles basis, but it might look very similar to what we have in traditional markets. It just might end up being similar, but it was kind of this icky feeling of like, hey, we used to do this in TradFi, therefore it's got to work over here. I don't think that's the right attitude, but I do think that when you work out the first principles, you'll end up at something that might look fairly similar. And I'll give you an example. When you think about kind of the retail adoption frenzy that we had back in, like the 2020 to 2022, you almost couldn't segregate ownership and exposure. The only way you can get exposure was you actually went over and went to an exchange, you actually got Bitcoin, you actually had a ledger wallet. You had to have all of that stuff in order to do it.
Not enough of us had ledger wallets, by the way, which is part of the problem at the end of 2022.
Right. And then the other side of it was, okay, hey, if I want to trade this stuff or I want to, find a way to just do more than hold it, where am I going to be able to find a good strategy? Well, I'm going to go online to YouTube and watch people do it, and I'll do it myself. And then you realize that, in a bull market, everyone feels like they're a fantastic trader because they're all up. But when things start coming down, you saw, just a lot of people get really, really hurt through this whole thing.
This is getting really personal for me, just so you know.
Well, so where I'm trying to get at simply is that I think what ended up showing itself as a result of all of that pain was that there's a premium for risk management, and there's a premium for people who can spend the time and have the expertise to be able to achieve certain things. And also, the ability for us to have exposure, maybe there's a service for providing that exposure without necessarily owning it yourself. And all of those things, if you think about it, are services that businesses can fill. And actually, that's how the traditional market kind of formed itself, right? That's why you have fund managers. That's why you have, banks. And look, there's a lot of that stuff that still has rent-seeking intermediaries that probably are just earning more than it needs to. And that's where I think the promise of decentralized economies like this actually provide a bit more of that value redistribution to the end user. But with that being said, I think people are starting to realize, hey, I'm happy to give up a little bit of my earnings if somebody else can do this professionally, right? And I think that's where you're starting to see in this particular bull run a lot more of these people saying, hey, I'm happy with exposure. I don't need to own, the Bitcoin myself. I'm happy to buy a BlackRock Bitcoin ETF because it gets me the exposure that I need, and I don't have to worry about keys, all that kind of stuff. In the same fashion, you're going to start seeing more people who are like, you know what, maybe I'm not as good as trading as I thought I was. And actually, that's where it's like, well, maybe there's people out there that do this professionally, and I'm willing to give up a little bit so I can get a lot more when it comes to returns. And at the end of the day, you're like looking at that, and you're like, oh, so who are the people that actually go to the infrastructure at the end of the day? Who are the people that actually come to people like Bullish? What's all these people who are doing it professionally, right? And that's the institutional part, right? There is an element of, yes, it still kind of comes from retail, but you start to see services in the middle providing, I'm hoping, real value add services. Yeah.
So much I can TradFi, this interest in institutional interest and supposedly growing appetite for crypto is a reaction to more retail demand, or not retail demand, but customer demand. But they want institutions, they want businesses, they want professionals to be the intermediary for their exposure.
Yeah.
That's what you're saying, is that it's very clear that there is customer demand, which is why the private wealth managers are the ones shouting at the sky about this, that there is growing demand on an end client side, which is creating the institutional interest in this.
Yeah, look, I think there comes to a point when, the market cap of an asset class is large enough that it cannot be ignored. I think that Bitcoin's at that point, right? And I do think that a lot of these other, coins that have had the duration, have been here for a long time, they're starting to get to a point where people are like, we can't ignore this, right? I mean, if you're going to spend money looking for small, medium, stocks in emerging economies to try to find alpha, in our space, you've got, coins that are much bigger than that, right?
It's still small. I mean, we're talking about, Bitcoin at what, 1.5 trillion market cap? The entire crypto industry, 2.5 trillion compared to $100 trillion in equities. Yeah. But it is, you're saying that at that quantum and, the single basis point growth over the course of 6 months, that's starting to become interesting.
It is. But also think about it. Like, that's what's so exciting about the fact that it's still so small. Like, for all the people that are, involved in the space, I think that's what made this so exciting. I'll tell you a slightly personal anecdote. So when I was deep into my TradFi career, I was always envious of how interesting and how cool all the internet companies were. Like this one time, I was so caught up with this like innovation bug that I said, hey, you know what? I'm going to go to Silicon Valley. I'm going to find somebody on LinkedIn that I know, a connection to know somebody else, so I can find like a way to visit these campuses, like see Google, see Facebook, do it. And I would just walk down and like, office envy all the time. You're just like, oh my goodness, they're so much cooler, and all that stuff. And I thought to myself, hey, wouldn't it be cool if at some point in my career I actually ended up going into the internet space? Wouldn't that be kind of cool? And I thought to myself when I, made the jump into this, crypto was small. It was, not really mainstream yet. There were no institutions in it yet. And I thought to myself, is this the right move? And I thought to myself, well, I keep saying that I would have loved to have had my career start in this, but back in like, 2007, 2008, it's like, I'm not sure I would have had the same conviction, right? Like you have the benefit of hindsight, but, you look at that and you're like, well, I could have joined Google, but I also could have joined, Ask Jeeves, or I don't know, like
Ask Jeeves. Well, you're dating yourself.
like who
My
knows?
goodness.
Like who knows, right? Like, But the point is, like, for all the people who don't
Lycos.
know that that's kind of, for all the people who don't know these terms, that's kind of the point. But the point simply was, like, you know, at that time, what was exciting in hindsight is the fact that it was small and it was early. And that's what keeps me excited about this space, is that it's still early.
Let's hope Bullish doesn't go the way of Ask Jeeves. Okay, so there is a counter argument to this. Oh, institutional money is coming, and it's going to come in such quantums that it must be good for the decentralized ecosystem, right? And part of what you said, I know that you didn't mean it in a negative way, but part of what you said is part of this counter argument, which is these traders look at crypto assets, and all they are to the traders, the professional traders, the Patagonia vest dudes, is just another asset. And it's interesting because it's gotten to a size and because the alpha is there, and what that new asset represents, the philosophy of decentralization, the philosophy of ownership and stakeholdership and digital property rights, right? All of these things doesn't matter at all to these traders, and certainly doesn't matter to the algorithms that they create, right? And that is bad for the decentralized economy and the Web3 world, the crypto world. If someone said, I mean, I'm sitting in front of you right now saying that, not necessarily believing that, but saying that, how would you respond?
I have to be honest with you, there are some people that look at it exactly that way. Like, it's just simply a money-making opportunity, and that's kind of their objective, and that's their only principle in doing this stuff. However, I do think that there are a lot of institutions out there that actually believe a little bit more than that and really do want to promote stuff. And look, just because you're trading something doesn't mean that all you're trying to do is, make money. It's a big part of it, but there are some other elements to it as well. There's a particular quote, actually, that I really like. Jacob, who's the CEO of GSR, a couple of years ago said on stage, hey, so I'm borrowing this from him, so, making sure that he gets due for this. But he said this great analogy, which was, if your Tesla stock all of a sudden stopped trading tomorrow, your Tesla does not stop working, right? It doesn't just like, oh no, markets are down.
I mean, with Tesla, you don't know. That may be a bad example, but who knows?
Well, it's so.
But I know. I get
this is his example. Yeah. So his point was simply that it's kind of disconnected. But Ethereum, if liquidity all of a sudden stops, then everything kind of starts halting down, right? And the utility of that starts to become problematic. And there's an element of, there's value created in things like providing liquidity, trading this stuff, making sure that people are able to access it. Because even though, for example, it might not be the trader that has the utility for it, on the chain itself, somebody else does, and they need it, right? And, for the most part, people are able to find sources for that. But when you start to get to use cases that require a lot of this utility token to be able to do it, you need to find liquidity from sources that you can actually go to and depend on, right? And I think that was kind of the crux of what he was trying to say. And I actually think that's a really interesting kind of example and analogy for how we think about this market. So
effectively you're saying that regardless of the intent of the professional trader, the fact that they are providing greater quantums of liquidity into the marketplace is good for innovation. It allows these protocols to continue having the oil to move forward, to invent new things for the better of society.
Yeah.
All right. It's a strong conviction, good claim. I'm sure there'll be people disagreeing with you, but I guess that's the beauty of this industry. Let's go back to talk a little bit more about disruption and innovation in the exchange world. You mentioned earlier that, if you can find that use case, as niche as it is, go solve that problem. And in many ways, the genesis story of Bullish was that even by 2020, there were the big players, right? We knew who provided the liquidity to the marketplace. There were a couple of them that really owned the marketplace, but you said, look, there is no one serving institutions. So take it whichever way you want, but where else does the disruption and innovation in the exchange place still happen? Is it actually the user experience? I mean, This might be a leading question. I personally don't think so. I mean, user experience is user experience. I was saying to you earlier, if you take the logo off of an exchange front end and you make everything monoscale and you remove the distinctive colors, everything looks freaking the same. I can draw it out for you in a napkin and every exchange seems to look the same. So could it possibly be user experience? Or is it the products? Is it more derivative products, more different types of perps? And by the way, that's the extent of my knowledge about financial instruments. So is it new products or is it something else? Is it new markets? What does disruption innovation actually look like in this industry?
Yeah. So I agree with you on the point that, like, hey, if you kind of look at what you can do on a screen, you're probably kind of limited. But, you never know. There might be someone that comes in with a big surprise and all of a sudden it changes how things go. But for the most part, people's interactions is there's a buy button and there's a sell button. That's kind of what it boils down to with a couple charts.
And the sell button gets hit far too infrequently.
But, it's so for example, with us, the vast majority of our clients actually don't really use the interface to trade. They do it systematically. It's kind of more of the type of traders that we interact with. So I agree with you on the UX part. It's an interesting problem to solve, and hopefully there's some cool surprises to come. But I think where the disruption happens, it's kind of a bit more macro, and I think a little more complicated. As you're seeing right now, regulations are starting to get clearer, in that here are the rules of the road, whether you like it or you don't like it, but here are the rules of the road. And because of that, there is a fragmentation happening across the world in different jurisdictions. There's kind of a discrepancy as to how clear, how unclear you are getting. But with that being said, the way that you can find disruption, I think, is going to be how do you solve these problems, particularly for people who are outside of one particular jurisdiction. Because if you're in one specific jurisdiction, I think it comes very close to just a handful of exchanges that are needed, and that's kind of it, right? And it solves that particular local market, and it's very much that case. Everywhere else, it then becomes a question of, well, how do you play in international markets? And that's kind of where we see ourselves at Bullish. So in that international bucket, there's a question of, okay, so we've got spot, we've got perps. Options seems to be like a new market that's coming up. RWA is also something that's kind of coming up quite a bit too. But also just, trying to find ways to solve for customer problems that are at that kind of global level. I think maybe a better way to put it is this. I think the innovation disruption is going to look very different for those who play in the global game versus the local game.
Where is there going to be more innovation?
I think it's going to be at the global level.
At the global level.
Yep.
Because of what? Again, because of just the size of the marketplace, or because the amount of money allows for much more interesting advanced products to be created?
I think it's a bit of that, right? Like there's a bit more, there's a larger market size. There's also just more playing room, right? Like if you're let's say somewhere in Eastern Europe and you've got a particular market that you're kind of focused on, you're going to basically try to maximize. There's a local maximization problem that you're trying to solve for. But when you're kind of looking at beyond just one particular jurisdiction, you're looking at a global maximization problem. And I think that's where the opportunity is larger. I think that's also where there's more dollars that will be spent to do so. But because also the threat is higher as well. The competition is tougher. And I think that's also one thing that will help to promote that.
We're 30 minutes into the conversation, and we have not brought up DeFi. So let's bring up DeFi.
All right.
Decentralized finance right now, from a trading volume point of view, is still at best 10% that of centralized financial, CeFi exchanges. DeFi loves to talk about TVL. I've made this point before on podcasts and also on stage and panels, which is incredibly unpopular as an opinion, that $100 billion of TVL and DeFi, and that's the big term, right? That's the big metric, TVL. That $100 billion it's just nothing. It's uninteresting. Like, why do we keep talking about that number? Which, by the way, has come down quite a bit over the course of the last several years. I think at its height it was about $170 billion, maybe in 2022. And that, again, is compared to an equity market, a total by the crypto value market of 2.5 trillion and a global equity market of $100 trillion. So it's still very small. But the reality is that DeFi is fun. DeFi is interesting because that's where the unpredictable stuff exists. That's where true alpha, life-changing alpha can be. That's where most of the financial instrument innovation is actually happening because it's a Wild West and there are no rules, and really, really smart people believe in truly permissionless, truly trustless systems. So could DeFi, even at its size today, could DeFi actually be a threat to what you guys are doing in the CeFi world? Or do you guys just see it as a friendly alternative and maybe sort of an extension of what you are trying to create?
Yeah. I would say that it's not going to be as controversial as that I think you're hoping for, but I think it can coexist. And the reason why I think so is because
you're a nice guy.
I'm a nice guy, but also because it goes back to this point about what's the job to be done, right? Like, I remember asking a sovereign wealth fund back in 2021, hey, so DeFi is the most popular thing, all that kind of stuff. It's really, really cool. And they're like, we can't touch it. Like, we just simply can't, right? We have no idea who the other side of any transaction is, and I'm just not allowed to do it. So cool. Well, hey, I brought something over from DeFi and AMM into a CeFi context. You want to interact with that? They're like, yeah, that sounds great. So cool. Like, that's an interesting thing. But it also goes the other direction, which is somebody that wants access to something that is truly innovative and truly at the kind of frontier, kind of leading edge of this stuff. It's probably not going to be in CeFi because there's so many rules to follow. There's so many things to kind of get things moving along. You've got to depend a little bit more on the environment in terms of regulations to bring things to market. So you're not going to get the newest token, the newest innovation coming out from CeFi, unfortunately. I think you'll find that the race when it comes to can you find a solution for a problem is probably interesting, but there is an element of like the pure technology innovation that's happening in DeFi is phenomenal. I think it's really interesting.
So is it a parallel system or is it a complementary system? It doesn't sound very much based on your description that you consider it to be complementary.
I think that there's a little bit of back and forth. So put it this way, right? I think that there will be jobs to be done that either side is going to be better at, and as a result of that, it will serve that market. And I think that because of that, we're going to have two markets moving forward, which is why I say it coexists. I do think, however, that when it comes to DeFi or kind of decentralized technologies and stuff like that, it is one of those things where I think right now there is so much momentum that it's not going to stop. And I do think that the amount of brain power and effort, human ingenuity that's going into this stuff is only going to compound over time. So I do think that at some points it will be a threat to CeFi. I think that, for example, there are some, kind of products that sit in kind of a CeFi market that just have not been, kind of innovative or evolved over 2 decades because, for whatever reason, there's some rule that hasn't been updated. I think this is where DeFi can really play a role.
Yeah, I mean, 2 years ago, if you uttered the word regulated DeFi, you would be shouted out of a room, right? If you're in a room of anyone who cared about DeFi or just Web3 and crypto, and you said, it suggested that there'd be such a thing as regular DeFi, you would be ostracized and you're done. But now more and more people are talking about the reality of regulated DeFi, of using the new technologies that we have available to us, including zero knowledge for selective disclosure and identities and credentials that are now driven by this new technology, to allow for self-custody wallets to exist still anonymously on-chain in the DeFi world, but be able to actually hold both unregulated and regulated assets and create an interplay that is less competitive, alternative, but rather complementary. I think we're still quite far from this. I think that and this is obviously the world that we play in Terminal 3, but in our conversations with DeFi networks and protocols, the vast majority of them will at least acknowledge that it is a potential future, but one that they don't want to deal with today. There's a small minority of them that are already seeing the opportunity with whether it be regulated stablecoins or RWAs and STOs to actually be a innovation driver to start bridging the gap between those two. I don't personally know how long it will take to make this a reality and whether or not that reality is good for the DeFi ecosystem. I think it is because, like you said, I think it's just going to bring dollars in to liquidity pools that previously just could not be there, right? Could not exist there. So I think it's good, but I think that still remains to be seen. So I think we'll have to come back again in another year or two to answer that question. Is it competitive or is it complementary?
I think just to play on that for a little bit longer, I'm reminded of a recent conversation a recent presentation I gave. Usually it's in front of people that are in industry, etc. Except this time it was in front of a classroom of 10-year-olds, and I was asked, given the challenge of explaining what is Bitcoin, what is blockchain, to a room of 10-year-old kids. And
did you know that was the purpose of you showing up?
I was asked to be a good classroom parent to provide this lecture. But it was interesting because, when I thought about really hard, how do I get this to a level where people understand? I showed a picture of the Roblox coin, the token that they use. And I was like, oh, does anyone know what this is? And the whole room just went up. It's a Robux. They all knew exactly what it was.
I was going to tease that out of you what it's actually called. It disappointed me if you didn't know that it was called Robux.
So they all are like, yeah, this is what it. And I said to them, like, can you use this over at the MTR? And they're like, no, we can't. I'm like, oh, okay, interesting. So, there's an element of what the value is, the ecosystem that it plays in. And I was like, well, that's kind of like what this is, right? This is kind of what you can't use Bitcoin for everything, but it has a value. You can exchange it for something else. You can go, etc. And it was because one of those things where I was waiting for them to give this, that all makes sense. But they all looked at me. They're like, of course that makes sense. Like, what are you talking about? Like, there's no epiphany here. It's just natural. And I think it dawned on me at that point that not only is there kind of a shift to this truly digital native generation, there's also this massive transfer of wealth generationally as well happening at the same time. And I think that the future of where DeFi is headed towards is one where I think it's going to accelerate because of this generation that's coming through. That's only going to be more digital native with more assets as well. And the use cases for finding a way to express that in a more digitally native world is going to require more of this stuff. And so I do think that there's a fairly promising future from that perspective.
Yeah, you have a huge advantage because you have kids, 3 kids, that are in that age range right now. Like if you truly understand what they do and why they do it, you're going to have a leg up to a lot of these other builders out there that just don't understand the next generation and the fundamentally different behavior that they are not only used to right now, but they absolutely expect in all their interactions with digital platforms, with money, with assets, with ownership and stuff like that in the future. So kudos to you. I'm going to bring you back to your part of your roots, which is as an operator, as a marketer. Okay, you were the global CMO for CLSA, and I'm fascinated by what marketing for CLSA actually looks like. But marketing and telling stories of why one like product is better than another, that is an expertise that you have. So I want to ask a little bit about the marketing game for crypto exchanges, because to me, this is what it looks like. Parties, stadium naming rights, EPL Formula One teams. And it has led to some crypto exchanges becoming household names, even if the people who know these names have absolutely no idea what these companies and technologies do. And they, obviously, if they've now also become the butt of a lot of jokes, as evidenced by the Tom Brady roast on Netflix. But I feel like even though it's succeeded as in they've become household names, I just cannot imagine that's sustainable marketing. Maybe that's my bias. Is it productive marketing? I'm not sure. So I'm going to ask you to put back your marketing hat, put back on your marketing hat. Is it good marketing? And I want you to be honest with us. Is it good marketing to do those things for crypto exchanges today? And people start to learn the names of these companies but have absolutely no idea what they do, and they don't engage. And if it's not the right way, what is an alternative way?
So I'll tell you a story, which is when we first started marketing Bullish, and we were very early on, doing a lot of experiments and trying to figure out our way. And this is all well documented. Bitcoin Miami, 2022, the first kind of like big conference when COVID, restrictions were starting to kind of draw back. There were, I don't know how many, like thousands of people that were there. We decided for that one that we were going to be clever, and we decided to sponsor the bull riding booth. So there was a mechanical bull. People could ride on it, and the person with the longest, that stayed on the longest won something. And it got so much attention. It made it to Bloomberg News, and they're like, "Look at this, Bitcoin Miami thing." There was so many things.
Proof of tenacity.
Yeah, and then there was a mention about this bull, and we were just like, "This is fantastic! Oh my gosh, look at the reach this could have, etc." For the following 5 months, as a salesperson who was in marketing and sales at the time, I kept on coming to people who were like, "Bullish, you guys are amazing. Heard so much about you. Blah 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 blah." It's like, where can I get more of your hoodies? And when's the next time you're going to do, the bull riding thing? And I'm like, do you know we're in exchange? You're like, what? You're in exchange? And it's just like, for months, people would be like, I've heard of Bullish. It's great. So going back to your point, I'm one of those like more, I guess, traditionally thinking marketers where I'm like, there has to be a funnel. Marketing's successful if you're driving through a funnel and you actually see real ROI on the back of it. And so if you aren't able to drive people through the funnel and you create a significant amount of awareness at the top, but you can't do the acquisition, you can't do the actual revenue conversion, you can't get retention and all, if you can't do any of that stuff, it's not successful, it's a waste of money. And from my perspective, I feel like for some of these firms, they were good at it for a moment. They milked it during the bull run, but in hindsight, you can look at it and say, well, if you had considered the risk of it being a deep, crypto winter, would you want to have this cost while you're doing this? And also awareness, is great, but if you can't move down the funnel, you get stuck with this point where everyone knows your name, but it's not what you want them to know you for, right? And I think that's kind of where there's an element of professionalism. I think it's coming into the industry. I think you're seeing it more, but there was such a waste of money in that last bull run on marketing. Like I remember speaking to a number of marketing agencies where they were just clawing for a crypto customer because they just knew there was money there. And it could be like anything that was like creative, get a lot of eyeballs, get a lot of impressions, and that was fantastic. But they were not always so successful in making it down the funnel and actually earning money, and they're gone. Those people are gone now, right? So I think what you've seen in this more recent run is you've seen a lot fewer stadium naming announcements. You've seen a lot fewer, F1, branding announcements. You're seeing people being a bit more judicious about their spending. And I think also that has to do a little bit more with founders starting to really put a little bit more pressure to say, show me the results of this type of thing. Because, if you're going to run a business and you want to build an enduring, enterprise, it's got to be profitable, right? So that's my views of kind of where marketing is. Well,
let's see what happens at Token Singapore and see if that theory that we've all grown up and learned to be better is actually true this time around. Importantly, how many seconds did you last on the bull?
I didn't try it because I knew I was going to get injured. So.
Is Bullish a Hong Kong company?
So Hong Kong is where we have the most employees. We have kind of been here for a long time. The way to think about it is we're a pretty international company. We operate in Hong Kong and Singapore and US and a couple other places. In terms of the staff, we don't necessarily take clients from all of those regions, but Hong Kong is a really important part of our DNA.
Block One and Bullish is a company that was incubated at Block One and then spun out, and it is an independent entity. Block One obviously has deep connections to Hong Kong. And during the first 2 years when Bullish was being incubated with most of your employees here in Hong Kong, were legitimately the true dark years for Hong Kong crypto. Right? We had no idea. The plug had been pulled on any path to retail trading licenses with the VATP licenses we have today. The regulators were aggressively against all that the industry seemed to stand for, and everyone left. But you guys kept building here. So what made you guys stick with Hong Kong during those couple of years? And frankly, like, what are you optimistic about vis-a-vis Hong Kong in the next couple of years?
I'd say that when we started building Bullish, the core nexus of the team was here in Hong Kong. And when we started really getting traction, it was just at the beginning of COVID and all the lockdown. And what was interesting was at the time, if you remember, is that the rest of the world quickly went into lockdowns. But
I remember.
Hong Kong was still pretty slow, and so like there was a little bit of, you could still gather together if you wore masks, and there was still an element of you could be in the office together. And so when we were building in stealth, we were just like, you know what, actually, it's worth having people together. And so we kind of kept on adding people around that. And because it was so stealthy what we were trying to do, it was just hard to build quickly without having everyone together. And so there was an element of that which propelled it. Now, as things got hairier with, for example, a lot of the bands that were coming through, and this question mark around kind of what's it going to look like here in Hong Kong, I think what kept us here was this idea that actually the talent that we needed for this kind of business, it's really hard to find the scale and the quality that we needed outside of this city. I mean, a lot of the people that we hire come from years of experience having worked at traditional finance firms, because it's kind of just what we needed, right? And so we said to ourselves, hey, you know what? We really need to keep on making sure that we've got the right people on the team. That's the key thing that we wanted to do. And it turns out that a lot of them, including myself, call Hong Kong home. And this is where we want to be. This is what we want to do, and this is where we think that there's opportunity, and that Hong Kong has bounced back in many times, right? And we kind of felt like there's an element of that which is more hope than strategy, but it was an element of...
That's entrepreneurship.
Right? There's an element of that which is what kind of kept us here. And we said to ourselves, you know what, like, yeah, it's probably wise that we make sure that, we're also kind of thinking strategically about ensuring that there's backup in places, but we just kept the core of the team here, and kind of feel a little bit fortunate that, we did that, and now we're here again. And, it feels like a lot of the gravity that left Hong Kong for a couple of years around our industry is coming back. And it's kind of nice to say that we stuck it out through that.
And the next couple of years, what are you most excited about with regard to Hong Kong and having Hong Kong still be a very large part of Bullish's history, home, people, base? Yeah.
I think Hong Kong is just a fantastic city. I love it here. I've been here for 16 years. I have a lot of family roots here as well. I think that Hong Kong for a long time is going to be, in a kind of macro setting, still a major financial hub of the world. And as we're kind of playing out, call it our side of the Web3 industry, which is much more aligned to financial markets and capital markets, et cetera, the theme here is that it's converging. It's converging with mainstream. And if you're converging with mainstream to a tier one financial center of the world, it kind of just makes sense that this is where you're going to start to see that institutional adoption, that institutional kind of frontier opening up in the space. So to me, that seems like a very promising reason why this is going to continue to be a very critical part to the broader ecosystem of what is happening.
4 years ago, when you decided to move from traditional finance, like a bunch of folks at that time, into the crypto world, and for you specifically, into this stealth project within Block One, which we now know as Bullish, like what incited that? What drove that? And the rumor is true that you were given $1 billion of the EO's $4 billion ICO raise to do that.
No.
No, but what drove you to do that?
Okay, what drove me was I had for a long time been interested in innovation. Like, I'm an engineer by training. I always kind of thought technology was really cool. And I always kind of, for years, had kind of, again, I mentioned like just envious of the internet industry because of its coolness.
Because of the offices.
Yeah, because of the offices.
Yeah, the
right?
yoga ball desks
Oh, yeah,
and the
yeah.
free candy.
Exactly.
And,
No, yeah. It's just like, the idea that
by the
there
way,
are
all of which
art-
is gone now because they had to cut that because they realized that's unsustainable too.
But it was this idea that I wanted to try something that was a little bit different. And being in traditional finance, what I saw was just effectively the same thing over and over and over with margins just being squeezed. And it was just like, that doesn't sound fun. Life is a little too short to continue doing the same thing over and over and over again. So I said to myself, well, what's the thing that I want to do differently? And to be honest with you, I think at the time, like my peak interest was actually in AI and that side of the world. But I actually happened to know some of the very first people that were hired for this particular project that is now Bullish. And it was a little bit of trust. It was like, I know these people, I trust these people. They're working on something that they're saying is quite interesting. I'm kind of following them first. And then when I got into it, realized, oh, if I'm really going to build a career, I probably need to do the research on this. And that's when I started to kind of really dive in deep and build the conviction to say, actually, this is really where I want to be. And, been here for 4 years now, lots of sleepless nights. But it's just kind of one of those things where I kind of followed some people into this space that I trusted, very competent. I kind of felt like there was an opportunity to do something different. And I kind of already had that innate kind of desire to be in the more kind of technology side. So,
well, we're certainly glad that you were tricked into this industry like the rest of us. Two final things I want to ask you about, both to do with assets that Bullish now owns and the big plans for them. I come from media. South China Morning Post was my home for 6 years. By the way, CLSA, founded by South China Morning Post journalists in the 1980s. Right. I did not make the smart move of going to start an asset management company and making billions of dollars. So, of course, I care about media. Bullish made big news at the end of last year by acquiring CoinDesk. I would suggest inarguably the most important media company in our space. And not surprisingly, the first concerns ended up being, whoa, editorial independence. CoinDesk is now owned by an exchange that has its own aspirations and its own goals and wants to make money, and now they have this powerful bullhorn. What are they going to do with it? What are the plans for CoinDesk? How do you guys see that as a part of this very, very important cog in this ecosystem, and how do we trust that you guys are going to be great stewards of that brand?
Yeah, a good question. So I think it's worth clarifying just real quick, what is CoinDesk? CoinDesk is 3 businesses. It's news, it's conference, and it's data. So in terms of the news side of things, it's very, very clear. And I mean, most of us kind of have had, exposure to news agencies through our, professional careers or whatever. You trust news when they have editorial independence. That's just part of how you do the business. And so there's an element of that which we went full into this and said, look, that has to remain. Otherwise, it doesn't matter what we say on podcasts or on stage or wherever else, people will see right through it. And so there's an element of, okay, well, we've got to continue to have that, and that's got to be continued to run with that editorial independence as it's always done. And so I think what you'll find is that has remained and that continues to remain. And if you don't see it, then it's pretty clear what's happened. But I think the proof will be in the pudding that will have remained. But the second part of it, the conference business, is where we saw, hey, this is a really interesting opportunity, right? What has been a primarily American-centric conference business, and for us, primarily Asia and Europe and rest of the world business, is something that we can complement one another for. Which is why when we made the acquisition, I got a call shortly from my CEO and said, hey, I'd love for you to please join the team to work on bringing consensus to Hong Kong. And I was like,
heck yeah.
And I was just like, I would love the opportunity to get on that and be able to help do that type of thing. And so, fast forward, because it's already announced that we're doing it, right? Like, we're looking at this and we're like, this is an amazing opportunity to expand what is a fantastic name with incredible amounts of, legacy to something in a new setting, right? And so what we're hoping for, when we bring consensus here next year, is not just simply the Austin experience, but in Wan Chai. The idea is to have a different kind of conference at that scale that brings both sides of the world together. And also, for those who are here in Asia, it's kind of showcasing all the incredible homegrown talent that's here in the industry. And for those who are coming from elsewhere in the world, it's this idea of being able to understand, kind of what's happening that, oftentimes just you don't get exposure to. And that's where you find alpha, right? So we're extremely excited about expanding that one, so that we've got Hong Kong consensus next year. And the third one, the data side. So most people probably didn't realize that CoinDesk has an index business, but the claim to fame around the index business is they provide the Bitcoin pricing to Grayscale for GBTC. And they also have a sweep of different products. And one of the things we said was, hey, actually, how can we work together with this particular one? Well, we said, actually, right now, there isn't a Dow Jones of crypto. There's a real use case to be able to reference a market and say, here's how U.S. equities are. You look at the Dow Jones, you look at the S&P 500. You don't quote, 30 different stock names and then say the overall looks of this is good or not good. And so we said, well, why don't we venture down that path? And that's actually what we've done is we said, hey, why don't we take a multi-token basket from their library of products and try to make something of that. And that's where, for example, Bullish has listed a particular type of instrument that has that ability to reference this CoinDesk 20 basket. We've been working with asset managers with this CoinDesk 20 to build funds around it. We've been working with people like BitGo yesterday announced that they're going to be ready for CoinDesk 20 index constituents. So we think it's pretty exciting because you've got this data and you've also got the ability to put it into practice, if you will. And so we're just across the board very excited about CoinDesk, how we can work together. But to your original question, we know that we can only really be in this business of news if we keep the editorial independence. And I think the idea is you can take my word for it or you can't. The idea is go to CoinDesk.com, read it yourself, and hopefully you'll arrive at the same conclusions.
That's a good answer, and you are a prescient man because you answered my last question, which was about Consensus Hong Kong, and we are very excited that Consensus has decided to make Hong Kong home, or new home, and it's going to bring its flavor of discourse and of experience and of engagement to our wonderful city. So,
well, can I add one more thing to the Consensus thing? Because I've been kind of on a personal mission. There's an element that, as I've been talking to people about Consensus here in Hong Kong, it goes a little bit beyond just the, hey, we're in the industry, let's do this type of thing. What I'm finding in Hong Kong as we're talking about this is just a genuine passion to showcase the city. And I'm really, really enjoying that aspect of it as well, because we're starting to talk to people who are not in Web3 at all. And they're excited about having a big conference here to showcase what's happening. And what I'm hoping for is kind of this element of, Consensus not just being this experience of you show up, you have an experience within four walls, and when you leave, that's it. We want this to be as integrated into the city as possible. And we love to partner with people who can bring people, travelers into Hong Kong, from Wan Chai to TST, to Seung Wan, to, wherever it is in the city. And I think that's been really cool, is kind of mobilizing people with a passion for Hong Kong to be a part of this journey, whether they're a part of Web3 or they're not. Yeah,
I've never had the opportunity to go to Consensus Austin, but I have been to Austin many times for South by Southwest, and that city and the way that entire city activates for these kinds of experiences. I mean, I think it's unfair to call them conferences, but for these kinds of experiences, to introduce everything that is weird and wonderful about that city to all those who fly in. What Austin does at those moments in time, it's just absolutely incredible. And I've always thought that one of the few other places in the world that could truly do that was Hong Kong. So I cannot wait for Consensus Hong Kong February.
That's right, February
2025. Everyone put it on your calendars. And thank you so much, Michael, for joining us on the pod today and for being our smart contact for this month.
Awesome.
Very much.
Thank you so much, Gary.